Hey, what's up everyone? Welcome to another edition of Market Update, and I just want to give you an update on what's happening in the housing market. Lots of changes, lots of scary headlines, but I want to put things into perspective, and if you're a buyer or a seller in this market, I want to give you kind of an idea what you can expect when you're out there in the market. So let's start off. It's no secret, real estate is in a recession. And what I mean by that, automatically what people think is house prices have fallen, they think of the worst. But prices have actually gone up this year. They've gone up about 4 to 5% depending on area. So when I say recession, I'm not talking about the prices, I'm talking about the number of transactions. It's definitely gone down compared to last year. The numbers in Orange County I don't have, but on a national level, we're about 800 to 900,000 less transactions versus last year. So last year was over 5 million. This year it's about 4.2, 4.3 million. So big difference, huge difference, about 18, 20% less transactions, which means there's less work for people in the real estate industry, whether that be realtors, loan officers, title reps, everyone, right? So that's what I mean by there's a recession in real estate. In terms of prices, as I mentioned, they've gone up this year, and I don't foresee them coming down. And the reason is just supply and demand. The supply is very constrained here in Orange County, Southern California in general, and nationally, supply is very low. That ties into the interest rates. Interest rates have gone up this past couple of weeks. We've gone above 8%, which is another milestone and another record that we haven't seen in probably decades. But is it going to slow things down on the buy side? Yes, I believe so, because it's going to hit affordability even more. People that were struggling to qualify at 6 and 6.5% now have to adjust their expectations even lower, that the rates have gone up to 8. So yes, it's going to hit affordability hard, and it's going to affect the demand. But on the other hand, the supply is really low, which is why it's still relatively a seller's market, and it's still the prices are not gonna drop off a cliff, because supply and demand, there's very little supply. So even with that, lower demand because of the interest rates, the prices are still gonna hold strong, and we're still gonna probably see some appreciation in the next period. So, if you're a buyer, my one piece of advice would be, if you can afford to buy, please go ahead and buy. And the reason is, when the rates go down, and they are expected to go down, we're hearing maybe mid next year, towards the end of next year, who knows, but they are going to go down. And when they go down, affordability is going to go up, and there's going to be a lot more people in the market. And with that, extra demand coming in, the prices are going to go up. So if you are in a position to buy now, you're just psychologically not too happy with the rates being at 8% and you missed the bus at 3 or 4 or 5%, just suck it up, buy now. When the rates drop, refinance, but at least you've locked in the price of today. In not such, it's still competitive market, but it's going to be way more competitive when, if the rates drop to 5 or let's just say 5, huge difference in affordability, lots more buyers going to be in the market. So it's going to be a lot more competition at that stage. And with the competition, is going to be a lot more, price increase happening. So if you are in a position to buy now, I would definitely say, go ahead and do it. If the numbers make sense to you, you can afford it, you don't like the payment, but you can afford it, go ahead and do it. It's going to be temporary. Don't budget for anything less than 2 years that you refinance, but it's probably going to happen before that. but if you can do it, go ahead and do it. Now, if you're a seller, we're going to see inventory heading down this coming period because, you know, the typical real estate cycle, things slow down in the winter, November, December, as we especially head towards the end of November when we get into Thanksgiving, and then it ties into, you know, Christmas, New Year, all that stuff. People just typically don't transact as much, but so we're going to see inventory go down. If you're a seller, if you have to sell now, it's still not a bad time at all. It's actually a very good time. And the only thing is, buyers now are looking for absolutely turnkey properties. They don't want to, they're already being stretched with their down payments, with their rates, with their monthly mortgage. So they don't want to go in and spend a whole bunch of money in addition to that. So the more you can make your property look turnkey and ready for a buyer to just move in, the more interest you're going to generate. The other thing is, you have to price it very, you know, well, so that it doesn't sit on the market. You know, people are looking at comps again. It's not the days of 2021 or beginning of 22 when you just, you know, throw out a price and people would come and pay it. You have to be very aware of what the comps are in your area, what the numbers are, so that it doesn't sit on the market for a very long time. So still a great time to sell, but you know, just you have to price it accordingly and make it look really good, and that's where we could help you with that. Also, if you're looking at selling in the beginning of next year, it's going to be a great opportunity because again, as long as the rates are still that high, there's not going to be many listings coming on the market, less listings coming on the market. So that's a good window for sellers that are looking to maximize on their return. If you have any other questions, I'm so happy to help. Please connect with us, and we look forward to speaking with you soon.